If you have an irregular income, like many of us who are in consultancy, maybe you're doing freelancing, most of salespeople, or even just you're a business owner, managing your money can sometimes feel like you're walking on a tightrope. You have good months, yes, we do. Those good months come, but there are other months that are very slow, and sometimes it's completely dry. But today, I want to share with you some of the smart, practical strategies that can help you to stay financially stable and thrive. The first one is track every shilling that you earn, at least get to know your cash flow. The first rule of managing irregular income is knowing exactly where your money is coming from and where it goes. Use simple spreadsheets or budget apps like at Japesh, we have a Japesh planner that can help you track all your income and expenses. This will help you identify spending patterns and better planning. If you're a makeup artist or a designer, track your payments from clients. Notice when the months are high, like in December, I know the business is booming. And also notice where the months are slow. Like in January, after the holiday seasons, the business can go a bit slow. So at least be able to identify my booming business months and my low business months. And this will help you to prepare for the super dry months, for those months that you only get maybe 1 to 3 or maybe 10 clients in a month. At least when you know that, you are able to prepare for such months. The second one is know your bare minimum living expenses. What do I mean by this? Start by calculating your absolute essential monthly expenses. This includes like maybe you're paying your rent, maybe you have a mortgage that you're paying for, like at least identify those expenses, food, transport, utilities, insurance, school fees, a loan app that you took from your friend or your chama and you have to do repayments. At least know all your living expenses and track them down. I'll give an example. If you live in Nairobi, your essentials might be maybe 40,000 a month. This figure becomes your baseline. Every month, you have to have the 40,000. When you know your bare minimum, or rather your minimum baseline for your expenses, you can be able to plan ahead even during the low income months. Like create two budgets, a survival budget and a comfortable budget. With that one, you can be able to identify my booming months, this is my survival budget. My good months, these are my comfortable budgets. Number 3, build a salary system. What do I mean by this? Pay yourself first. Since your income fluctuates, create a baseline salary for yourself. And it has to be a fixed amount that you pay yourself on a monthly basis. When you're, like, for example, when you earn more, set aside the excessive in a separate account to cover up the low income months. How do you do this? Step 1, calculate your monthly expenses. You remember those expenses that I've mentioned prior? Calculate them and write the exact figure. We had like 40,000 in that person living in Nairobi in my previous example. Write down 40,000 in mine is my minimum monthly expense. The second step is when a payment comes in, be it maybe a transfer or anything, when that payment comes in, immediately transfer that payment, that fixed amount to your personal salary account. When your paying comes, maybe your clients are paying through a certain bank account, always transfer it to your personal salary account that you have identified for yourself. The third step is save the rest of in a buffer account for future dry spell. Those are the 3 steps. The first one is at least your bare minimum, which is the 40,000. If this is the bare minimum, I create a personal account. So I'll be paying myself 40,000. Anytime money comes in, you transfer it to your 40,000 account, your personal account. Any extra amount that comes in, you transfer it to the buffer account that you have designed, or rather you have delegated for your dry spells. Like I'll give an example. If your basic salary maybe is 30,000 a month and you get a good month that earns you 80,000 in a very, very good month, just continuously pay yourself the 30,000 and save the extra 50,000 in the buffer account. If it's on a bad month, remember maybe bad month can come and you earn 10,000 and you need 30,000 for that month. You see now we had put aside 50,000, but I need extra 20,000. I'll go to my buffer account and transfer myself the extra 20 so that at least I'll continue meeting my expenses of the 30,000. Fourth point, separate business and personal finances. And this is where most of the entrepreneurs go wrong. They always mix their businesses finances with their personal finance. Many entrepreneurs, when I say many, even not even only entrepreneurs, even people who are in freelancing, who are in consulting, they always mix their business finances together. So it's time now to separate. This leads to, if you don't separate, it can lead to overspending and sometimes headaches. Overspending with good months, headaches with very low months. So this time, open a business account. Like you can take one of the banks that you use. That one, let it be a business account. Then any money that clients keep on paying, let it go in that business account. Remember, previous point was pay yourself first. So the extra money that you decided, I'll be paying myself 50,000. The extra, automate actually. Let that 50,000 go to your personal account, a salary, so that in a month, a booming month, even if you get high amounts, maybe clients have paid very well, you will not be tempted to overspend. And with that one, you have separated your business finance with your personal finance. Set up a standing order. That's my tip. That moves money from your business account or collective account, the business finance account, to your personal account on a monthly basis. The fifth point is emergency fund. Emergency fund. We always talk about emergency fund. If you get income on an irregular basis, remember, you're the first person who needs to have at least an emergency fund account. You can target maybe 3 to 6 months worth of your expenses and put it in a liquid account. As long as the account is yielding a high interest rate, like most of the MMF accounts do. Start small, even if it's just, putting aside 500 per day. Just be consistent and let your emergency fund grow. If your monthly expenses are maybe, for example, the 30,000 I was using before, your target emergency fund should have at least 90,000 if you're targeting 3 months, or 180,000 if you're targeting 6 months. For me, my recommendation is even put 1 year. At least have 360,000 set aside, because sometimes a year can come and things can, how things can be. Maybe an election year afterwards, your business was depending on, I don't know what, but election comes, there's so much chaos and you cannot be able to survive for the next maybe 8 months because your business was affected. But at least if you had an emergency fund for like 1 year, you will continue surviving even if your business was affected, until at least you're able to lift up that business. So contact Japesh Financial Solution and we give you guidance on how, or rather which fund managers you should invest with in terms of emergency funds. We use CIC, Britam, and Sanlam. So it's up to you to choose any fund manager that you want to start saving for your emergency fund account. Point 6, create multiple income streams. Have as many multiple income coming in as much as possible. Don't rely on just one client or just one project. Diversify your income to reduce risk. And how can you do this? These are the ways that you can do it. Like you can offer an online product after work. Like if you're in consulting, or you have a consultancy firm, or you're a makeup artist, you can at least now start online products that you can be able to do and they will generate income. You can create a YouTube channel. You can go rent a house and maybe start doing Airbnbs. You can invest in stocks, and with stocks, they will earn you dividends. Or if you're a risk-averse person, you can invest in circles. At the same, they will give you dividends as passive income. You can invest in T-bills, MMFs, government bonds. There's a time government bonds were getting to 17%, which was good. So those people invested that time, they will earn good passive incomes. You can even just invest through rates, or even come to Japesh and we help you get into the global markets. That is investing in the international markets. But simply what I'm trying to say is try as much as you can to earn multiple income. The point number 7 is prioritize cash flow over big purchases. It's tempting to upgrade a car or move to a bigger house after a good month, but resist that urge. When you get, like now, for example, the insurance people, or if you're a trainer and you get a good big client, and maybe they give you like a 2 million pap, instead of you like upgrading the car that you have been wanting to upgrade, after that closing that big deal, invest part of that into a dividend paying product or vehicle, like a circle. Like you get that 2 million, don't touch it. So you had your way of surviving with the maybe 40,000, or or 50,000, or even 100,000, and the 2 million comes in. Don't rush to buying that item that you have been wanting to buy. Just sit down first, put that money aside, even in your MMF, let it earn interest for like 6 months before you decide whether you still want to purchase what you want to purchase. Always ask yourself, will this purchase help me make more money, or protect my money? You get my point? Like, always ask. You get that big project, it has paid you 2 million. Ask yourself, ukijipeleka kwa ako kamushamanyo, ask, will this money help me make more money, or will it protect my money? Then the point number 8, plan for taxes. If you're especially in businesses, avoid last minute shocks for paying taxes or managing your taxes. Irregular earners or business people often forget to set aside taxes. Like, be saving like around 10 to 20% of each payment that you receive in a separate account to avoid huge bill come June. If you earn like 100,000 from a project, set aside even 15,000 depending on your tax bracket, and that one will be used for your taxes. Number 9, use debt wisely. Like, avoid loan apps. Loan apps, like those ones that can trap you in debt cycles. Always try as much as you can, especially if you're earning an irregular income, to avoid debts. If you must borrow, opt to get a lower interest loan. Like, options, you can get yourself in a circle, and after saving for that circle, at least they can give you a loan, but at least with a lower interest. That's an option that I will always advise people who are earning an irregular income. Or better alternative, instead of taking that maybe 10,000 loan from the circle, you can actually negotiate with your client to pay prior, to give you a deposit prior to your project. And with that one, you have avoided that debt. And final tip which is point 10, always automate your finances. Set up a transfer, like automate the transfers to your savings, your investments, and bills, so that even the salary account that I was talking about, so that you don't overspend when cash flow comes in. Always automate. You can do this through maybe signing a standing order, doing checkoffs, doing direct debits. At least have that automation that you create for yourself. Well, irregular income doesn't mean irregular living. With planning, discipline, and smart money habits, you can enjoy stability. Remember, peace of mind and even wealth creation, no matter how unpredictable your earnings are, remember, it's not about how much you make. It's about how much you're able to manage what you make.